Okay, so we've arrived at our last panel. The theme of the conference is doing nothing a good strategy. Well, I think we've heard enough during the day to realize that there's an awful lot happening, so probably doing nothing is not a good strategy. But nonetheless, we're going to have a discussion about this on our panel. We have Michael Parker, Chairman, Global Shipping and Logistics at Citi. We have Elias Sakellis, Chief Executive Officer at Australis Maritime. Anastasios Aslidis, Chief Financial Officer at Euroseas and EuroDry. And we have Felix Nölke, Managing Director at MPC Capital. And our moderator is Akcasoy, Managing Director, Advisor to the Board at Newport Shipping. So Ege, please. Over there.
Thank you, Kevin. Let's get started. I don't know if many of you have seen the latest David Attenborough special on BBC about the sea monster. Late last year, an archaeologist serendipitously came across a piece of fossil of a Pliosaurus jaw on the Jurassic Beach in Dorset, which turned out to be a new species. After a painstaking dig from the cliffs for the rest of the fossil, allowing study of the entire snout of this animal, it turns out this was likely the apex predator of its ecosystem, and bigger than a comparable T-Rex. So a bite strength of more than twice as much as any animal known to humans. So considering the caliber of this panel, I thought we would attempt our own dig in the next 35 minutes and try to ask some fundamental questions about the industry. To briefly introduce our panelists, next to me is Chairman, Global Shipping, Logistics and Offshore of Citi and Chair of Poseidon Principles, Michael Parker. And then CFO of Euroseas and EuroDry, Tassos Aslidis. The CEO of Australis Maritime and partner as well as CIO of Borealis Maritime, Elias Sakellis. And finally, the Managing Director of MPC Capital AG, Felix Nölke. Michael, perhaps we get started with the ambition and cooperation behind the Poseidon Principles have been fundamental to progress in decarbonization efforts, at least for the behind the $240 billion of assets they're financed. You've recently brought targets in line with the IMO requirements, and some of them have preempted the subsequent one, such as moving away from tank to wake to well to wake, as well as the increasingly constraining CII. Now, how are debtors reacting? Are they prepared to take these steps immediately? What are some of the more difficult conversations you foresee having?
Thank you for that question. I think the Poseidon Principles is now 34 signatories and global, representing institutions all over the world. And what we were doing last year was sitting and trying to anticipate the direction which members of the banking panel earlier talked about, which is the pressure banks are under from their shareholders, from their regulators around aligning the allocation of capital to ultimately net zero and the Paris Agreement. We had some fairly intense discussions about what 1.5 might mean, and in the end we decided to wait for the IMO to decide at MEPC 80. And I think we were all, including famous Dr. Tristan Smith, surprised by the success of MEPC 80 and 175 countries agreeing to, in effect, net zero around 2050. When that decision was made, the incoming Secretary General of the IMO made it very clear publicly, speaking at LISW in September, that that was now the policy of the IMO. And for that reason, we unanimously, in the Poseidon Principles, have adopted those trajectories as our ambition. And I do commend you all to read the 4th annual report we published in December, where we showed our progress against the original 50% ambition. And what was interesting about that is collectively how close we had got to that original trajectory. And that's probably less to do with the actual banks and decisions we made, and more to do with two things. One, the amortization of our portfolios, which means older ships were disappearing from the portfolio, but also the steps already being taken by our clients to improve operational efficiency. So in a way, we moved to a new ambition, but having got close to the ambition that we had originally set out to do. Now, what is important about the Poseidon Principles, and it's often confused, this is about transparency of the bank's portfolios. It is not about penalizing our clients, but it is, again, as my colleague Vasilis and Paul Taylor talked about on the banking panel, this is about trying to ensure that our shipping businesses get the capital within our institutions so that we can actually help finance the transition. And so if you look at the results against the new trajectories, of course, we're quite far off, and that's because actually the IMO's ambition is more ambitious than even the 1.5 trajectory of SBTI. I think our clients understand this, because I think there's been a lot of education in the last 5 years. I remember, I think it was INSW in New York adopted the Poseidon Principles methodology in its own fleet about a month after we actually launched in June 19. So I think the difficult conversations with our clients are not about can we have the data. The Poseidon Principles for Marine Insurance, the Sea Cargo Charter, or the other initiatives asking for that information. The issue is going to be about our own managements asking us to align with these new trajectories as quickly as we can. And that then gets back to the individual ambitions of the individual signatories, and how in the allocation of capital, the decisions to lend, a lender decides to implement that, if you like, either through the choices they make, but also any conditions they put on those loans. Now, there is an aberration, which is in the cruise industry, where the CII approach does not really work, and we're quite clear in the report, and I do suggest people read it. And that will change. The lobbying going on by the cruise industry to better represent the true emissions rather than the carbon intensity of the industry is ongoing, and by the end of 25, the CII process will have been reviewed and hopefully changes will have been made. So I think we're all in this together, and I think the understanding of what we're trying to do is there, and so I don't really see there being any difficult conversations. The real issue today, as the previous panels have talked about, is until the true zero emission fuels are there and the vessels are there, what do we do in the meantime? And that's a difficult balancing act, and that's where, from what I heard from James Frew this morning, most of the bankers need to go off and get a crash course in fuels and the science and chemistry and everything else to understand this better.
Thank you, Michael. Okay, so let's perhaps move on to business models. The current period of transformation has started impacting business models. Changes vary from reframing existing objectives to a complete reallocation of assets. This can be hard to pay attention to because of the daily news flow of news impacting decarbonization strategy into an increasingly uncertain future for global trade economics and geopolitics. One recent example was the decisive sell-down of Ridgebury Tankers following a shift to a broader platform, managing separate investment vehicles for multiple investors. Another example is present on our panel. Elias and his team sold out of container ships completely and went very long offshore, oil and gas, both in debt and equity. And investors have continued to put their confidence behind Elias as the pivot was executed successfully. And Australis and Borealis recently raised a significant amount of funds announced last week. I understand perhaps you're also interested in developing a plan for offshore wind. So Elias, congratulations on the raise. And can you share some of the lessons from your recent journey of changing focus significantly in current segments that may pique your interest at this point?
Thank you. Look, the good news about being on the last panel is that a lot of these key messages have already been touched on throughout the day. So I'll try to keep it short. At the end of the day, we all agree that this industry lends itself to two things. One, there is volatility, and that creates opportunity, obviously, to buy and sell. But the other one is that it's very varied, with multiple segments with their own cycles. And so, if you place yourself with a wide enough mandate to be able to make the most of both of these two aspects, then you're hopefully going to set yourself up for some good opportunities. So, yeah, look, our containership play obviously lasted a lot longer than we were originally expecting it to. It was a very prolonged downturn. Equally, like many people said earlier today, nobody could have foreseen the violent recovery on the back of the pandemic, and therefore it was the perfect opportunity for us to take profit. Again, in itself, that was an interesting exercise because it was a very, very large fleet. It wasn't necessarily the easiest thing to do. But in the end, it ended up being really, really good. And we've also continued to sell some of our earlier tanker assets over the last couple of years, especially on the chemical side, on the back of everything that has obviously happened in the broader oil and gas markets. Again, if you look at offshore, the only thing that I will say is when we started to invest in offshore, it was by far the only segment which was attractive on an absolute basis, not just a relative basis, but an absolute basis. Very deep discount to replacement costs, no new build order book, huge amount of distress and pain, opportunities to do off-market deals with banks, et cetera, et cetera, et cetera. And these are rare opportunities, so that's what we did. Obviously, today, the market is also very, very attractive, but it's a very different market. Asset prices have recovered. Equally, the earnings environment is very, very different, with very healthy cash flows. And so the nature of that opportunity also is shifting, and perhaps further away from opportunistic equity towards more structured investments, definitely credit, et cetera, et cetera. So look, this is ultimately the business model that we are trying to pursue. We don't always get it right, but this is what we try to pursue. Take profits when they're there, and then look for the next opportunity. And if it's not immediately available, then be patient, because it's going to come.
Thank you. Let's perhaps turn to Tassos on this. Tassos, Euroseas has a very clear strategy with its fleet targeting longer-term charters, and you also have a strong charter revenue backlog. Has the focus on predictable cash flows differentiated you in front of perhaps debt investors? We can also cover the equity side as well.
Thank you, Ike. Thank you for the question. Indeed, Euroseas has been able to capitalize on the strength of the market during the pandemic years and book long-term charters for all of our container ships. Definitely that backlog that you mentioned, which right now is in excess of $300 million, backlog of contracted revenues, has made stronger the value of the corporate guarantee of Euroseas, of the parent company. So that is clearly reflected in our discussions with our bankers to finance our projects, to refinance existing ships. But even more importantly than that, we have initiated a new building program, ordering 9 ships. Definitely discussions about financing that program with debt has become much easier, knowing that there is contracted cash flow supporting the assets.
Has that helped on the equity side as well? I appreciate you have this internal, tangibly realizable value calculation.
Yeah, that's a good question. I think today I can say it has, because our stock price over the last 12 months had an 80% run up. I think we're still quite unhappy at how it trades vis-à-vis the NAV or the tangible realizable value. I think today we trade at 70%, which is sort getting into the okay range, given our past experience, but a year ago was way below 50%, which was unacceptable. But I think somehow the market sees the value of the contracted revenues, perhaps because of the recent events in Suez and in other areas of the world, and is giving us some credit about that, which we hope we will continue, and we hope we'll be able to capitalize on that.
Sure. Before we move on to perhaps decarbonization, you also agreed to acquire 3 Ultramax bulkers. Fundamentals on the supply seem positive. On the demand side, there's still uncertainty on the bulker side. Well, what is your outlook and strategy, very briefly, on the bulkers?
I think that in the dry bulk sector, right, this is what you're referring to. I mean, that is one of the sectors in shipping that presents with the greatest potential to have a significant increase over the next 2 or 3 years. Supply side being so low, the order book to fleet ratio being below 9%, it's 8.7 now, for so long, for the last 3 years has been that low, that has created a significant underbuilding of the fleet. So with all the environmental regulation hitting on us, which potentially could make economic life of certain ships shorter, there is a possibility of a supply squeeze. Of course, that will not happen if demand is not there. And all the challenges on the dry bulk sector rely now on the demand side. Whether China will be there to provide the growth we have been used to, whether the geopolitical tensions would work in a way, will go away, first of all, for the benefit of all of us, but work in a way to make demand for ships higher, would be the key questions that we have to answer. I believe I'm on the optimistic side, primarily because of the supply side overall. I think that presents a foundation that could translate any positive shocks on demand to significant results in rates, significant increases in rates.
Very well. And finally, perhaps, how did the separation of activities and responsibilities between yourself and the charter counterparty play into your decarbonization plan?
I think on the basis of our existing charter contracts, each party is doing what it's supposed to do. In terms of vessels on long-term charter that face significant decisions like a dry dock, I mean, we have been cooperating with our charterers on how to make those vessels last longer by retrofitting them. We have a case of a ship that we shared the cost with the charterer in installing a bulbous bow, changing the propeller, doing some other improvements in the ship to be mutually beneficial. So the charter saves a lot of fuel costs. That particular case, we would reduce our fuel bill by more than 15%. So the charter will save will have significant savings, and they agreed to share them with us to fund the retrofit of the ship. So this is the nature of discussions we had so far.
Fair enough. Thank you, Tassos. Felix, let's move on to MPC. We've seen the Starbuck announcement, an offer to acquire Eagle. It'll make 162 bulkers in an otherwise quite fragmented market. More recently, MPC and Wilhelmsen partnership continues to pursue the market consolidation strategy. And in addition to that, the Zeaborn acquisition, expected to close in the first quarter. A Maersk and Hapag alliance announced last week. Do you see further consolidation being attractive to a broader set of investors in the segment MPC operates in? And perhaps you can also briefly mention you guys' segment.
Thank you very much. I think, first of all, what is important to note is for us, the acquisition of Zeaborn has not only been a part of consolidation, but having acquired a ship management company which has more than 100 vessels under management, including tankers as well as dry bulk vessels next to the majority of containers, where we had traditionally been focused on also with our partner, the Wilhelmsen Group, has been a matter of diversification for us as an asset manager and enable us to broaden our service offering, broaden our geographic footprint, and therefore also enable us to develop a wider range of projects and deliver a better service to our clients. So is there a trend to do similar things, potentially, if the pricing is right? But ultimately, this opportunity for us also enabled us to create a ship management hub in Hamburg and in Northern Europe that also reaches a critical scale to be competitive compared to the other larger ship managers. So that has been a driving factor for us in this type of acquisition that we concluded.
Anybody else want to comment on consolidation in the industry?
Sorry, come again?
Anybody else want to comment on the consolidation of the industry? Please, Elias.
It's a very broad question, and it really goes back to, segment by segment. There are segments that are ripe for consolidation and clearly are quite concentrated. For example, a small example, but we're managing the second biggest fleet of coated chemical tankers around Europe. And this does have benefits because it is a parceling business, it's a contract business, et cetera, et cetera. So the largest part of commodity shipping, I personally don't believe in consolidation. I think it's a super fragmented market. Even if you were consolidated, your clients are much, much bigger than you are. And so I don't think you will ever really find yourself in a position on a sustained basis through the cycle to dictate pricing. And so you need to turn more into what type of service are you providing to your end charterer, to your end client, rather than how big you are. My personal.
I can make a comment on that as well. Before the advent of the public markets for shipping, ownership consolidation obviously did not make sense because it didn't happen. What made some sense, and it did happen to some degree, was commercial consolidation. That's why we saw pools developing in the tanker, bulker, even in the container sector. After the public markets have become part of an average CFO's concerns, it makes sense to consolidate for the sake of the public markets. The larger you are, the better pricing you get, the more recognized you are, more people are willing to invest in your stock. So I agree with you. That was definitely the case before the public markets. With the spectrum of the public markets, perhaps merging and increasing in size makes sense. That's why we've seen recently certain mergers.
It'll happen over time. I don't disagree with Elias. I think the sort of a provoked round of consolidation by bankers or ambitious ship owners in most sectors is less likely. But the issue is going to be building the new ships. Will you be able to afford to build them? Will the cargo owner choose to use owner A with a small fleet as one of their primary shipping logistics players? I think over time, because shipping is going to become much more expensive, from the building of the ship to the operating of a ship, it's going to lead to bigger companies that have the scale, whether that's in the public markets or private markets, or whether you outsource a lot of those services that are actually going to be expensive. So I think there's probably a big opportunity for some of the ship managers to broaden some of their services. So I don't think it's going to be spurred for financial reasons other than because shipping will become much more expensive, because the cargo owner is going to be driving the agenda, where things like reputational risk to the cargo owner is only going to get higher. That may lead to an inevitable slower consolidation, even in the tanker and bulk sectors. So it'll happen probably over time. It does not mean being a small ship owner is impossible. It just means it'll just be more expensive and more difficult than it has been historically.
Thank you. Maybe starting with Felix again. Picking up from Tassos' points earlier with predictable cash flow and differentiation in front of investors. Investors may not differentiate between companies and segments and sub-segments very clearly in shipping. What can be done to raise this awareness?
Yeah, I think this actually is a very fair point. And if you look at the news also with the recent developments in the Red Sea, I think some of the news outlets actually got the type of vessels kind of wrong when that happened. So, but overall, how we have experienced it, and looking at our largest investment, MPC container ships, I think the best way to do it is the investor education and also talking to outlets when it comes to small and retail type investors. I think if I look at the gentleman around the table, when we are talking to the institutional clients that are investing in the companies or in the assets, I actually don't think that there is a shortage of understanding the type of segment, underlying fundamentals, etc. I rather think that when it comes to the swing type investors, retail and the likes, that's where the education needs to take place. But also when it comes to listed entities, that's somewhat also the responsibility of the marketplaces where that is taking place. We obviously had the advantage with the Norwegian market, Akcasoy in the US. I think there's also being a tremendous job being done there. And I feel it is happening today already. And when it comes to institutional investors, I would assume that that is actually not so necessary, in my opinion.
Anybody else want to comment on how we can raise awareness?
I think having the simplest thesis you can put forward, the better off you are. That's why, I mean, Euroseas used to own bulkers in the beginning of our public history. 6 years ago, we spun off the dry bulk fleet on a separate company, EuroDry. That's why I'm in both companies. We did that to make our message simpler and help the investor focus on the fundamental supply-demand interactions on as simple a segment as possible. I think that worked for us overall. I believe, I mean, it's hard to make a statement now that it's generic, but at the moment we did the spin-off, the combined value of the two entities increased by 50%. So I think that was appreciated, and it helped us chart separate strategies for the two entities. For example, in Euroseas, as you mentioned, we have mostly contracted revenues. In EuroDry, we are fully exposed to the market, partly by choice, but we can make two theses and people can choose which one they would like to invest in.
Let's try and cover off the decarbonization bit. Going back to Felix again, when evaluating and making investments, you're approaching regarding to retrofit opportunities. How do you identify and analyze asset opportunities that have retrofit potential? And I think if you could talk about you ordered dual fuel methanol container vessels, sure, playing an active role in energy transition.
Sure. I think, well, when we are looking from the investment side, when we are looking at opportunities today, we as a large group, we have the advantage of having a large research department as well as a technical department. So even if we are analyzing older assets, our analysis will always involve them and will always involve what type of retrofit opportunities are there that are financially sensible. And at the same time, we also analyze every vessel in terms of CII rating, ESG, ETS, and how that's going to pan out depending really on which trade they're ultimately on. So even if we are considering older tonnage, or because we are actually agnostic in terms of the different sectors that we go in, can be containers, dry bulk, etc., that will always form a fundamental part of our analysis and ultimately also of the exit and residual value analysis. Now, I think in terms of the vessels that you mentioned, the methanol vessels, Christian Richley, who's my co-MD and also COO of MPC Container Ships, was on the panel earlier. There we had the big advantage with Elkem and NCL to have a very long-term contract backed by COAs, and today we're happy to report that already 20% of the methanol that's required for the engines has actually been secured. And that's already prior now to the delivery of the vessels, and we are quite confident that we will be able to do more until delivery of the vessels towards the end of this year. So, but obviously all that goes hand in hand, and for us it was a vital part of the analysis and a vital part of the discussions and negotiations with the cargo off-takers and with the charterers in that case.
Okay, thank you. In the interest of time, I'll just ask a concluding question to every panelist, perhaps starting with Michael. When the early mover advantage doesn't seem so clear, I guess the topic of this today, When the early mover advantage doesn't seem so clear, how should market participants justify taking confident steps forward, or otherwise holding off to gain more confidence in the steps they may want to take? What are helpful steps to gain such confidence?
Do what you can. And I think, I heard the word wind. If every ship that should deploy wind technology on it, and we've heard before that there are ships that it's not appropriate for, but that's free. That will pay for itself very quickly. And in fact, if you think about it, the cost of shipping is only going to go up. The future fuels will be even more expensive. So every ship owner should really be looking at where they can deploy wind technology. And you heard it from, the panels before. It's going to all be about data. Data is increasingly going to be what appears in, the procurement, the cargo owners, the regulators. They'll be looking at really emissions. They'll be looking at the environmental impact of not just shipping, but everything. And so anything you can do, and the more you can be transparent, the more likely you are to attract positive attention, both from investors and from your customers. Because in the end, with something like CII, we're going to see two-tier, even maybe three-tier markets begin to develop in various sectors. And it isn't going to be about, the price you charge for the capacity. It's going to be about a lot of other things. So doing nothing is not going to be really an answer. But there is, as the panels before have said, there's a limit to what can be done now, other than being prepared. And I think for anyone who's not in the container sector, watch it very closely, because the container sector, driven by things like the COSEV Alliance, will dominate the early stages of this, and then other sectors of shipping will need to follow fast. The last thing I'll say is there was a small bookshop. I think that's where Jeff Bezos started, and then he decided you could sell books online. His market cap is more than 3 times that of Shell and Total put together. If he wants to have his own fuel for the ships he either owns or charters, he will. And so the pace of this change is going to be driven obviously by technology, obviously by the science, but it's also going to be driven by significant amounts of private capital going for certain solutions. What we need is governments, whether through the IMO or regionally like the EU, to come up with the frameworks like a carbon levy to close that cost gap so that we can move forward quickly.
Thank you. Tassos?
Yeah. Shipping is around because society needs it. This is the cheapest way to move goods around, and I claim it will remain so in the foreseeable future. So we need to decarbonize, but this is a problem not only of the shipping industry, it's a problem of the planet. Priorities need to be set across the industry, and I think the convention in Dubai, this is what they try to do. It cannot happen overnight, so we need to manage a transition. It will probably take a generation of ships to make a transition to a greener shipping. Us, in the near term, need to take every little step that we can to contribute in that transition. I mean, the retrofits, like the one I mentioned that we did, make a step, small enough may be, but it's a step towards creating a greener planet for us. So this is the spirit that we need to follow, and doing the most we can given today's technologies to get there.
Thank you. Elias, please.
Not much more to add. Look, at the end of the day, I don't believe that there is any glory in being first, to be honest with you. I fully agree with what Michael said. I think it's doing what you can. Generally speaking, what we try to do is A, to keep it simple, and B, avoid deals that are called strategic, because that typically means that the economics don't work. Just keep it simple.
Yeah, I think not much more to add. I rather believe also embrace in challenges and opportunities that will come along the way on the decarbonization side. But then, as Elias said, keep it simple and don't forget the transaction and deals that are simple and simplistic, that will most likely earn you a better return ultimately. So.
keep it simple, and do what you can. Thank you so much. Thank you, Marilyn.
Yeah. Thank you again to the last panel. That's the end of the conference. Thank you to our sponsors, to our speakers, and panelists, to all of you for coming along. You're now very welcome to attend the cocktail reception co-hosted by IRI, the Marshall Islands Registry, which is in the room to my right over here. Yeah? Thank you very much.